What's the best way to raise capital for value-add real estate?
Raising capital for value-add real estate often comes down to building strong relationships and trust with potential investors. It's really about showing them the value and the potential returns of your project. One of the most effective ways is to leverage your network, attend real estate and investor meetups, and maybe even start a podcast or a YouTube channel to share your knowledge and build credibility. Also, having a solid pitch deck that clearly outlines the investment opportunity, the risks, and the expected returns is super important.
This is a great answer, but let me tell you my approach. Everybody asks me, Rafik, how do you raise capital? Where can I get investors? How can I get money for my deals? Well, let me tell you something. Capital is a commodity. Everybody has capital. Some people have a little bit, other people have a lot. You have to be smart and strategic about your efforts in pursuit of capital. And if you understand the playbook, if you understand the pitch, and if you understand how to do it correctly, you will have extreme success in raising capital for whatever you want to do, whether it's real estate, whether it's business, or anything else. But there's a secret sauce that I use to raise capital for my deals, and I'll share that with you in this video, so stay tuned. My name is Rafik Moore. I'm the CEO of Brait Capital, an investment company with a focus on value-add deals. Over the past decade, I've raised tens of millions of dollars in equity to do value-add deals. And that's why I love this topic so much, because raising capital is a skill. And if you understand the skill, if you know how to approach people, how to negotiate terms, how to build trust and that relationship with your investors, you will be able to raise unlimited amount of capital for your deals. But let me tell you how I raised my first million. It's a very interesting story. So it all started when I met this individual, a friend of mine now, who was going through some hard times, and he quit his job and was starting his company. He said, Rafik, I'd like to office in your space. I had a mortgage company back then. Can I just take a cubicle and set up my station so I can work there? I said, no problem, go ahead. I didn't even charge him anything because I was so excited to have some new people in the office. Times were tough. Mortgage business was in shambles then. And I remember going through a hard time in that period. One day I took him out to lunch. And at lunch, as we're eating, he asked me what I do. And I said, look, my mortgage business is in shambles, but now the way I make money is I buy multiplexes. I buy duplexes, fourplexes, houses, I flip them, and that's how I pay my bills. It's a really good business because there's a lot of distressed opportunities. But the problem is my credit is distressed and I can't really get bank loans anymore, so I gotta work with hard money lenders or private investors. And without thinking much, he says, well, I have some money. If you're interested, I can lend it to you. I didn't really do any private loans before then. Everything I've done was with my own capital and with banks. So I said, well, what are you gonna lend me? He said, I can give you money at 20%. Now 20% annualized is very expensive money, but I didn't have any other options. So I said, look, I'm buying this duplex for $45,000 and I'm buying a fourplex for $95,000. So, and I need about $50,000 to fix everything up. So if you give me a round number like $200,000 to buy these properties, I'll pay you 20% annualized, which represents about $40,000 a year. Because this money was so expensive, I went to work on this property like a crazy man. I worked weekends, evenings, and just wanted to stabilize it, just to get rid of the obligation. I was gonna flip the properties. Within 60 days, we finished the construction, we leased it up, and somehow, serendipitously, I got an offer on both properties from a trust fund baby, cash offer from this particular buyer. She paid me $450,000 for these two properties. After I did my math, I made about $155,000 and change on these two deals in 3 months. Maybe I was lucky, maybe it was working hard, but either way, that's the story. And then I received the settlement statement at the closing. I show up to meet my investor with two checks. One check for $200,000 that I paid him, and I said, here's your profit, 20% over 3 months, which came out to be about $9,500 and change. He took his $9,500, he's like, well, great deal, congratulations. And out of curiosity, he asked me, well, how much did you make? I grinned and I said, I made $155,000. I still remember the emotion. I was so elated because going through tough times, $155,000 goes a long way. He could not believe it. The news of foreclosures, the news of economy being in shambles were all over the place. And yet this guy, in his mind, was making $155,000 in 3 months. He saw how much I made. He was extremely excited to continue working with me, but he says, look, I don't want to be a lender anymore. I want to be a partner. And then I said, well, if you want to be a partner, I don't work with anybody until they use $1 million investment to do deals with me. And in secret, I didn't have any investors before then. I just worked with banks. And he said, okay, I'll be happy to invest $1 million. And we opened an LLC. And not only did he give me $1 million of equity, which is down payments, he also agreed to sign on debt with local banks because my credit was destroyed. In this LLC, the first deal we did was a 20 property portfolio that I picked up for $800,000. And after cleaning it up and fixing it and selling them over the next 18 months, we made about $1 million profit on this 20 property portfolio. So this is the story of how I raised my first million. After that, it went like butter. As I went out to masterminds, as I went out to investor meetings, as I networked with other people, I constantly told people what I do, and I raised money. There's 3 things you need to do to level up your capital raising skills. But if you want to go deeper, I do coaching calls on a weekly basis. I teach people how to raise capital. I teach people how to make money. Let's make money in real estate together. Click on the link below, join us, and I'll see you there. So here's how you can master capital raising skill with 3 simple steps. Number 1, don't think you're doing anybody a favor. The approach that I have always is that I have something, an opportunity, I got a deal that's really, really good, and I'm sharing that opportunity with my investors. It's a mindset shift. If you're a beggar, if you're asking for a handout, people don't respond to it. So what I would say is always think that you're sharing an opportunity with your investors. When my mentor says, Rafik, how is it that you go around town, point fingers at your buildings and constantly buy them? I said, look, I'm a Santa Claus. I find amazing deals, and then I share these deals with my investors and then make a lot of money. If your investors make a lot of money, they'll keep coming back for more and more and more. Second, don't be greedy. I could have negotiated with my first investor and said, I'm not going to pay you 20%. I'll pay 15% or 12%. Because before that, I was paying 6%. Doesn't matter. If you establish a relationship with a high net worth individual, that high net worth individual will give you money consistently, because first deal is merely a down payment on your relationship. So I wouldn't haggle about price and terms. Make sure you got enough time to finish the project. Make sure you don't lose money on it, right? But most people will be okay with a 15 or 20% return on their investment. Third, continuously raise capital even if you don't need it. Oh, it's such a great advice. I'll tell you why. Because if you continuously raise capital and people's ears are perked up and they're ready to give you capital when you found a deal, well, then you have a line out the door of people who are interested in investing with you, and you can triangulate, you can negotiate with them. If you have 4 people interested in investing in one deal, you can call them and say, look guys, I cannot pay you 16% max, I can pay 14, knowing you got a backup. And that's a little secret of my trade. So raising capital is like oxygen to real estate investment business. Forget about saving money. Forget about having to put your own money into deals. It doesn't work. If you buy large assets, you're not going to be able to do more than one deal, even if you save for 10 years. The magic of our business, the magic of value-add investing, is in the fact that you get to buy properties using other people's money in a respective, responsible way when you pay the money back with interest and they come back to you. So if you want to go big, learn this skill, master capital raising skill, so you can unlock tremendous amount of potential. One more thing I want to say, when you pitch investment opportunities to investor, remember 3 things, very important things. Number 1, every investor wants to know, what are you securing my investment with? Are you giving him a mortgage, a note, personal guarantee? Are you giving him assignment of membership units as a collateral? Are you making him a pref equity partner? You need to communicate that in your pitch, executive summary or offering memorandum. Number 2, you want to tell him how much he's going to make on that investment. Don't let him do the math for you. Most of the people say, oh, Rafik, I want to invest. What do you think? Well, if you told me what this investment is, what my security is, and what my return is, I'll tell you if I'm interested or not. I act as a capital partner myself many times. Remember to tell people what they're gonna make on this investment. And third, very importantly, when they're gonna see their money back. Most of the investment companies take the people's money for 10 years. Who wants to be in the investment for 10 years? Anything can happen in 10 years. I personally don't like that. I want to get in and get out of deals all the time to maximize my return on investment. So our investments are anywhere from 6 to 18 months, on average about 12 months. We get in, we stabilize everything, we either sell the asset or refinance and keep rolling the equity capital. So remember, security, internal rate of return, how much are they going to make on it, and when they're going to get their money back. If you have these three metrics available to them when you request the capital or when you're asking for money, then basically your probability of securing capital increase exponentially. If you do not have an investment ready and you're raising capital continuously, like I mentioned in the past, then you say, look, on average, I take the money for about 12 to 18 months, and on average, I pay about 15 to 18% on my money. So when I have a deal, I'll call you, can I add you to my investor list so that I can follow up with you when I get a deal? And if you need some guidance or want to learn more about this process, want to go in depth, feel free to join us on our coaching calls. We do them every week. Click on the link in the description. I'll be happy to see you on one of our Zoom calls. So raising capital is like oxygen to real estate investments. If you master the skill of capital raising and create a systematic approach to communicating with your investors, constantly pitching your deals, identifying those three things in your executive summaries, over time, you will have a list of investors ready to go to invest in your deals, and then magic will happen. All you got to do is find opportunities because investors will be standing by waiting for you to find deals. And you might become the richest man in Babylon. Thank you for watching, and I'll see you in the next one.